So yes guys, the very first thing that I told you beta in this chapter, that international trade as such guys is supposed to increase the efficiency of operations guys, is supposed to increase the global output level, is supposed to provide employment opportunities guys. All of that is possible guys, or when these were the arguments in support of international trade, they assume beta that there will be free trade, but in reality beta free trade does not happen. Free trade as such beta does not happen. There's always some amount of trade distortion as such beta, there's always some amount of trade distortion guys. Countries do not strictly beta follow free trade rules. You should understand beta, when we use the word free trade beta, there is minimum government interference guys, so you can freely import and export goods. The demand and supply will determine the prices, but when you talk about a protectionist measure guys, it is a lot of government interference guys to protect your domestic industry from foreign competition. When you use the word trade liberalization as such beta, we are basically telling you that a government that the economy is slowly opening up as such beta to foreign trade by reducing the amount of trade barriers, in this chapter. When we use the word trade policy, we are referring to the instruments beta that is used to prohibit or to encourage the amount of foreign trade, either restrict guys or increase the amount of foreign trade, and also guys the approach that is taken beta for trade negotiations. Both of them beta will form part of trade policy. Your instruments of trade policy beta are segregated into price related measures beta, that are tariff measures, and the other one beta non tariff measures or non price measures. Under price related measures we will be talking about tariffs only guys. Under non price measures, that is non tariff measures, we would again be talking about technical measures and non technical measures. In the end beta, we will also be talking about export related measures. So guys, when we say tariff, we are basically talking about a duty, a tax that is being levied, a duty or a tax beta that is being levied on goods and services imported or exported. This is a financial charge. Normally beta, when we use the word tariff, we associate beta that with imports. That is why in this chapter the word tariff beta by default would refer to only import tariffs and not to export tariffs unless otherwise specified. Now tariffs beta becomes a source of revenue to the government. Tariff is also used to protect your domestic industry, guys. There are two types of tariffs beta prima facie. One is specific tariff, the other one beta is ad valorem tariff. When we use the word specific tariff, it is tariff based on a physical measurement, based on a physical quantity guys. Tariff based on kg per liter. Ad valorem beta is as a percentage of the value of the commodity. There are a lot of other forms of tariffs beta. The first one is mixed tariff, which is either specific tariff or ad valorem tariff, whichever is higher. Compound tariff or compound duty, which is a combination of both. It is specific tariff and ad valorem tariff. Then beta there is technical guys, that will obviously depend on the specific contents of the imported goods. Ki tum log, as example that I gave beta, or that is given in the ICS study material, is solar panel as well as battery. Per solar panel you'll have to pay so much, for additional battery or kg of battery you'll have to pay so much. You can have tariff rate quotas beta, that is where up to a specified limit of imports, the amount of tariff or the rate of tariff will be so much. Beyond this quota, the rate of tariff would be very high. Most favored nation guys, I told you that every member of the World Trade Organization guys is supposed to treat the other members beta equally, fairly as such guys. So if it's reducing the amount of tariff rate for any one member, it's supposed to reduce that beta for all the other members as well. However, this rule beta will not apply if it is through preferential tariff. That is the next point guys. If it is through some preferential agreement as such beta that has been entered into by between two nations. Preferential agreement ka example that I gave you beta was the India Africa guys agreement, or the US Canada Mexico agreement. Variable tariff beta is the difference between your domestic price and imported price. Difference between the domestic price and the imported price. Bound tariff beta is where a WTO member guys is binding itself. A WTO member guys is binding itself with a legal commitment. Beta as to not to raise tariff rate. WTO member beta is committing itself not to raise a tariff rate beyond a certain level. Beta, जैसे I gave you example of how China beta is disputing that India has agreed to a 0% rate on mobile panels, but then it is still levying a rate of 10 or 20%. Applied tariff beta is the duty that you're actually charging on imports beta. Escalated tariff is on raw material imports beta. The amount of duty is low. On work in progress, the amount of duty is a little higher. On finished goods, it is the highest. It is all to protect domestic manufacturing. You want more and more manufacturing in India, provide employment opportunities in India. Prohibitive tariff beta is that the rate of tariff is so high, guys, that literally beta at that rate there will be no imports made. Import subsidy beta is instead of levying a duty, instead of levying a tariff beta on the amount of imports, government is providing a subsidy as such, guys, for imports. This can be in relation to specific raw materials as such, guys, specific components, specific life saving devices, or for specific medicines as such, guys. Tariffs as response to trade distortions, unfair trade practices beta will negatively impact the amount of will negatively impact the domestic players, guys. For that purpose beta, we have something called as anti-dumping duties and countervailing duties. Anti-dumping duty beta would come into picture where a particular exporter, guys, is exporting to India at a price that is either lower than his domestic price or at a price that is lower than his long-term average cost. In that case beta, India reserves the right beta to levy anti-dumping duty. Countervailing duty beta is where an exporter is able to export to India beta at a cheaper price only because he's being given a lot of subsidy beta by his country. So to offset beta that impact, India will obviously levy a high amount of duty in the form of countervailing duty. Understood, sir? The effect of tariff beta is that it will reduce the amount of international trade, it will reduce consumer surplus in the importing country, it will increase producer surplus, it will make beta, it will ensure that more and more people enter into this trade as such, guys, in the domestic country and provide employment opportunities, guys. Provide employment opportunities. It will become a source of government revenue, guys. This would obviously result to trade distortion. Trade will not occur at free trade level. The quantity of goods traded beta will not be equal to free trade level. It will promote domestic industry. So because of the recent trade liberalization, guys, WTO efforts, so many trade agreements that have been entered into a country's economic policy beta, tariff ka impact has reduced, guys, but nevertheless all the countries have started resorting to better non-tariff measures, NTMs as such, guys, which are even more destructive, guys. So non-tariff measures, guys, are these hidden or invisible measures better that affect your free trade. There can be certain amount of mandatory requirements, rules or regulations better that have been legally said you're supposed to comply with these rules and regulations, only then you're allowed to import or export. This will either be better at restricting better or facilitating international trade. It can be anything, guys. So NTMs beta can be for legitimate reasons beta or can be used to protect your domestic industry. If they are used for legitimate reasons beta, no problem. But if they are used to protect your domestic industry, you can classify NTMs beta as non-trade barriers. Here beta we can say that non-trade barriers are basically a subset of non-trade measures. Non-trade measures. We divide our non-trade measures into two categories called as technical measures and non-technical measures. Technical measures beta are related to your product specifications, can be in relation to product or processors technical specifications. All the other measures beta relating to trade requirements like licensing, shipping requirements, custom formalities beta would come under non-technical measures. Guys. Non-technical measures are again classified beta into hard measures, threat measures, and other measures. Your technical measures beta are classified into SPS and TBT beta, sanitary and phytosanitary measures, and trade barriers, technical barriers to trade. Okay, sir. Sanitary and phytosanitary as such beta is basically beta anything that is to protect your human, animal and plant lives as such, guys, from the risk of excessive usage of additives, pests, microorganisms that can cause diseases. तो उसके लिए बेटा whatever measures that have been undertaken are SPS measures. Other requirements beta related to production process or beta related to the size specifications, guys, will related to your product labeling, guys, would come under technical barriers to trade. Beta. ठीक है? You will have to remember both, guys. Do not forget that. Non-technical measures, guys, not related to product specifications, production processes or anything, guys. The very first thing beta that we have here beta is import quotas. The very first thing beta that we have here, guys, is import quotas. When we use the word import quota beta, you're basically specifying a limit, guys, up to which a particular commodity can be imported, guys. That particular quota can be binding quota or can be non-binding quota. Binding quota beta is where the quota is fixed at below the free trade level, guys. So that is basically restricting or reducing the total amount of imports This will reduce consumer surplus, increase producer surplus, provide a boost to the domestic industry. On the other side, beta, non-binding quota is a quota that is fixed at a level higher than the free trade level, beta. That will have no impact on the domestic international trade, international trade, guys. Also, beta, your quotas can be classified, beta, as absolute quota and tariff rate quota. Absolute quota, guys, is an overall quantity that is specified, or beta, by country of origin also, guys. Country of origin also. The importer, beta, because of the limit on the total quantity that can be imported, guys, can sell this product at a higher price in the market, and the profit that is generating out of this, beta, can be termed as quota rent. Can be termed as quota rent. Tariff rate quota bhi reh sakta hai, beta, wherein up to a specified limit you are charging a low tariff. Beyond that limit, you're charging a very high tariff. Price control measure, guys. Remember, I spoke about minimum import price for piece. Non-automatic licensing and prohibitions, guys, that there is discretionary licenses issued, or there is a prohibition on a trade of a particular commodity. Financial measures, beta, we will not give you foreign exchange, or you will have to compulsorily make an advance payment. Measures affecting competition, only a government entity, beta, or only a particular private organization can import this and have the right to distribute this in the entire market. Government is procuring only from domestic players, beta, not from foreign players. This is their way, bit of reducing imports and promoting domestic trade. And then, beta, if you were to manufacture in India, you will have to compulsorily source 25% of the components locally. You cannot import more than 75% from a foreign imported components. That will come under trade related investment measures. Distribution restrictions, guys, that you will have to compulsorily distribute as such, guys, only through an additional license or a permit that will be given to you as such, beta, and only through a particular distribution network. Restriction on post sale service. What if you cannot, beta, you cannot operate service or render service as such, guys, after selling a product in the domestic country? You will have to specify rules of origin. Kya ho raha hai, beta? You will have to specify the country, beta, in which the product is originated, as a immediate measure to safeguard a particular industry as such, beta, that is being threatened as such, beta, by imports. You can impose a total ban. Embargo, beta, is a total ban on some or all of the commodities to and from a particular country, guys. Export related measures, guys, you can either ban exports of a particular commodity, or, beta, you can levy export duty to reduce the exports of that particular commodity, so that there is excess supply in the domestic country, guys, and the amount of domestic prices reduce. Likewise, you can also incentivize, beta, you can give incentives or subsidies, beta, to promote export. Finally, beta, there can be voluntary export restraints, that is, beta, setting an informal quota up to which a commodity can be exported to a particular country merely because of the relation that you share with that country, guys. I hope you're all clear about this, beta. See you guys in the next class. Bye bye, guys.